Hey, this is Justin with DayTradeTheMarkets.com on March 6th, and I wanted to have a little bit different look than what we normally do. Normally I kind of focus in on day trading charts and day trading setups and that sort of thing, but I wanted to take this opportunity because the last couple of days have been relatively interesting to look at the market on a little bit bigger picture scale, and obviously bigger picture is relative to what you used to trading. But this is a 15-minute chart of the E-mini S&P. You could use any time frame, anywhere from 15 seconds to daily bars, but in the same logic applies. But I've found that the 15 minutes is a pretty good intermediate time frame chart in terms of giving you a pretty good heads up in terms of what's going on bigger picture in the market, and it helps you kind of stay on the right side of the market on a little bit more of an intermediate level. You can also obviously use this for a swing trading basis if you're looking to buy and sell the market at certain key levels. There's some pretty good moves here. I mean, this isn't a great sell-off here, but it's a 25-point move down. So you're looking at a bigger scale here, in the sense that we're looking at about 2 weeks, a week and a half to 2 weeks back. And I wanted to talk about a few things here. Number one, what this means bigger picture for the market in terms of expectations, and also talk a little bit about the idea that we like to call one-sided versus two-sided market, and then talk about why it's so important. I heard a story the other day about it kind of lends itself to why it's so important to wait for evidence rather than trading with your gut. So with that said, let's just take a brief look at this. Going back to like the 22nd of February, had a little bit of a rally, and then you can see we tested into this level, which at the time, let me backtrack a little bit. We've been looking over basically the past month. We've been looking at an area around 1523.50, and if you've seen other videos, you've heard me talk about that level. But the 1523.50 level all the way down to about 84. And this going back even before this chart, those are kind of the levels that we were really monitoring, with the idea that if we could break above it, it's relatively bullish, bigger picture, and if we could break below it and have sustained, what we call acceptance below it, it would be a relatively bearish indication. But until that time, when we were between this level